Hi everyone, welcome to the show. I hope. I see Steve just joined the space. Good morning, Steve. How is it going?
Morning, how are you, Henry?
Wait, I'm not hearing you. I'm not sure. Wait 1 second, please. I'm not sure if it's on my side or on yours. Okay, I think now I'm hearing you.
Let's
Do you
go.
hear me? Yes.
Yeah, I can hear you. Everything's good.
Okay.
Yeah.
Okay, perfect. So yeah, hi. Good morning, everyone. Good morning, Steve. I hope you're all doing well. I hope you're all good for a second day of today of our week, Tuesday. And big news, big news. SpaceX is blowing through the roof, new all-time highs on NQ. We have an agreement of understanding between Iran and the US. So many things to talk about. Let's go. Guys, one more thing, as you have just seen on the screen, the risk disclosure. It's not a financial advice here. It's pure educational and entertainment. So do your own thinking, only trade your own strategies, be aware of your own risk exposure, and in terms of your own strategies, never copy anyone. Don't take anything we are talking about for granted. It's our pure opinions. And trust me, Steve and I are more wrong than we are right. So I would never count on that. Right, let's go. Steve, what's your take? What's your take on the news front, on everything?
Yeah, I like that. I like that mindset, Henry, to be wrong more than you're right. So that helps you embrace the loss, but then also try and keep losses smaller, of course, than your winners. So I like that mindset going in the prop game, where you embrace the loss, make sure it's minimal, very small, where it doesn't hurt your account. But when you have the winner, make sure you try and have that winner much larger. What do you think?
Yeah, I think it's the only way forward, right? As I can see from our internal data, from thousands and thousands, 10,000s of traders, I can tell you one thing, guys. Most of the people are letting the losers run and cutting their winners. And usually it should be the other way around, right?
Yeah, yeah, exactly. Yeah, like
Yeah.
for me, for my prop game, I'm usually giving myself a little extra room, breathing room, even negative RR. Of course, I'm closing a lot sooner than it reaches that. But once you're able to just let the trades go, you trail them and use your volatility and use the volatility that's given to you in the markets, then yeah, that's the thing of the game. But yeah, let's get into the news, what we have today. And more of a relaxed day. I guess you could say also yesterday as well. Nothing major on Forex Factory, with Forex Factory, Financial Juice, wherever you're looking at the data. We got no Fed, no CPI, no earnings. That's earnings season's finished. So yeah, all we have is just some housing, some jobs data, and yeah, just smart money, watching it closely. This could be more on the macro side for long term. But yeah, let's just break it down. And after and look, then we'll have some time to look at the charts, since nothing big is coming in about 10 minutes. Yeah, usually 8:30 time, 8:30, 9 and 10 after New York Open, we get some news. But because it's more of a relaxed day, let's just go and get through it quickly. And then Henry can take over on the bigger picture. So yeah, ADP on the weekly employment change, expected around 29,000. So this is a private payroll indicator. We have building permits, expecting at 1.42 million. Housing starts at 1.43 million. Import prices expected 0.9%, small cooling from last month. And ADP crude oil inventory for any oil traders coming in post-market. And yeah, the G7 meetings are still rolling on all throughout the day. Not sure if we're going to get any sort of impulses, any big headline risk on those meetings, but that's something to keep in mind as well. So why does this matter? This is on housing and inflation data. So yeah, keeping things steady while housing is struggling with these high rates is also an indicator for affordability, for retail, for markets. Overall, the support is cooling but not collapsing economy, even though markets, SpaceX, NASDAQ, all-time highs. the economy is painting a little different picture. So anyone that's really looking on their personal, their personal finances, housing, inflation, this could be like important factor to look at. But with markets, we're not going to be getting any sort of real movement unless we get some sort of surprise impulse come in that we're always watching out. But volatility is starting to pick up right now. So Henry, let me know if we do have any sort of news coming out. I don't see anything right now.
No, I mean, I don't see it either.
Yeah.
I think the big news events over the last couple of years, over the last couple of days were obviously, for one, the SpaceX IPO, right? That whole Wall Street and Broad Street has been waiting for. So
Yeah.
it was a success. We will take a look at the charts later. But like the big macro global news events that everyone was watching, and especially the big money traders have been obviously closely observing, is Iran and the US conflict, right?
Yeah.
And for the time being, so they came to a conclusion to they start the negotiations, and but there's another party who is not really agreeing with this whole thing. So I think it will most likely not go as smooth as all the participants would like to see.
It never is smooth. Never is.
It's never is smooth. So maybe a minor word of a warning here, guys. Always be aware of upcoming news, right? Watch closely your favorite source of news. Either it's Forex Factory, Financial Juice. We have no partnership or anything affiliation with them. It's just tools that we're using ourselves. And you can take any other tool you like, but so basically you need to see if the market starts to move super fast, like out of nowhere, and you see this big spikes, big impulses coming in, 50, 100 points moves in a matter of minutes, then most likely some news came out of nowhere, and most often than not, it's coming from Truth Social. So be aware, be aware of that.
Yeah, I don't have a Truth Social account, but for that reason, to get that print sooner than Financial Juice, because sometimes Financial Juice and News Squawk, the feed is a little delayed, where you see that increase in volatility, and you're like, okay, what's going on? And then finally see, oh, it's Truth Social. So for that reason only, I thought about getting Truth Social. What do you think, Henry? Do you have an account?
Yeah, I have an account. I tried to have it, but to be honest, it looks like 90s, like a bad website from the 90s, full with spam and like random ads and God knows what. So it's like, I think Truth Social is basically just a singular news social media platform for the president.
For one reason only. And I think it's free, right? Like you don't have to pay for anything. I think it's just free. You just hop on.
To be honest, I don't know. I didn't bother to check. But it would surprise me if anyone would pay for it. So, but back on topic. So
I was just gonna say, so no big scary surprises expected. Just with the news spread at least, but with conversations.
Actually, maybe one thing to add is, in my personal opinion, actually, let us quickly change to this view. My personal opinion is that now with some topics out of the way, I think the market will focus on new narratives to keep on climbing, right? So probably Anthropic IPO, OpenAI IPO, so like those kind of AI games, and it's like basically always holding the carrot and in front of the traders to keep the market grinding up. And so I think those things will matter. Then the CPI print will matter, right? And the unemployment numbers. So I think those things will come back into place. And even though they came to the agreement that the ships out of the Strait of Hormuz should be getting out of it over the next 30 days, it's a logistical nightmare, right? Because it's there like over 2,500 ships inside the strait, so they need to organize them. They need to let them through. So it will not go. It will not. They will not get. It's not like a highway where you open it and then within a matter of hours, all the cars are passing through. So it's going to take weeks and weeks and weeks to work them through. And then the ships need time to get back into the harbor, to their desired location, destination. And so in my personal view, we will see a hotter CPI print along the way. So I'm curious to see how it will play out, if the Wall Street will ignore it and just a transitional period, right? And
for now they're ignoring it, as you can see.
For now they're ignoring.
For now they're ignoring it.
And I think this is also something important for many people to consider, that my personal opinion or your personal opinion doesn't matter, right? Because it doesn't matter if you are right or wrong. We are intraday traders. We're not positioning ourselves for a long-term position that's going to play out over a couple of years. It's we really just want to know what happens today and today only, because all that matters to us is basically making our 50, 60, 100 points, whatever your time frame, whatever your strategy is.
Yeah.
And that's it. And
that's actually it right there. I just wanted to quickly note where the opinion doesn't matter, whether it's from, even think about it, whether it's from Goldman, but they have a paid opinion, so they do it because they have a paid opinion, or whether it all comes from ourselves as retail traders. You're posting online, you're sharing with friends. Keep that to yourself. Focus on your trades, build your bias, stick with the bias, and then journal it afterwards. Don't worry about spreading your opinion online and stressing about it online. The only reason most people are stressing their opinions online because they're either selling a business or they're getting paid to sell that opinion, right, Henry? But the free opinions and the paid opinions, end of the day, doesn't matter. Create your own opinion, create your own bias, and trade accordingly. But yeah, as we can see, low risk on economic news front. So far, the bias is still bullish. We're well above the gap. We're also well above New York Open, but I can get into that later after Henry's segment. So yeah, we could see tech grinding higher or any buying dip opportunities if the bias continues and the narrative and the news does not change.
Okay. Yeah, I think it's a good summary of what's going on, and therefore let's switch over to our big picture, right?
Yeah. Don't tell me that's SpaceX. Oh, that's all-time high. That's great.
Over 200, right? So major moves yesterday, almost 20%. Today already 4% up pre-market.
Yeah.
So huge movement. Actually, we had a kind of a continuation pattern yesterday. If you want to see it, like here on the 1 hour chart, 60-minute chart, it's like a kind of a triangle, possible bullish pattern. It's actually also quite a pretty one. So
the patterns are already coming in.
The patterns are already coming in. I mean, there are always patterns. All depends on the time frame, right? But yeah, I think it's suicidal at this point to fight it. It's like a GameStop 2.0, just on a much higher scale.
Yeah.
And we just don't know how far it will go, because it's obviously all over the place on every major news outlet throughout the world. So Elon Musk is, I think one have to say, is an amazing salesman who is also really good at what he's doing to promoting those kind of things. And
he's the greatest salesman.
And it proves him right? So okay, yeah, guys. No financial advice here, but it's always hard to fight or to fade such tremendous breakouts, because nobody knows how far it will go up, right? We can, at this point, it can do anything. It can go to 50, 300, 500,000. Nobody knows. It can drop, so we don't know. Therefore, be careful if you are playing around with options, 0DTE, stocks on SpaceX or whatsoever. Have always a stop loss in place, and trade only on proper strategies and not on assumptions or pure speculations. But one thing to say, this one here has a major implication on NQ, because with SpaceX now valued over 2 trillion, and basically also one of the major player in the whole AI and technological space, the narrative now favors the whole bullish case of continuing grinding up higher. And this is all what we need to know, right? So we don't need to, at this point, we don't need to agree upon is SpaceX a valid business? Has it a proper value proposition on those kind of things? It doesn't matter. It just
Yeah,
matters
none
that,
of that matters.
oh, no, it's true. It doesn't matter. It just matters that it goes up, that it grinds up. And as long as it goes up, it will push the whole market with it up higher. And as long as the narrative lives, there's nothing else for you to do than to just go along and take the easy path. And yeah, so Nasdaq, we talked about it yesterday. We basically completely now completed our breakout. Also, we have reestablished our trend line up, like our bullish trend line that we broke. Now we have reconfirmed it. Now we're breaking above. We had this resistance area, and we talked about yesterday that if it breaks above and closes up properly, then that's a bullish case, right? So we never, and this is what it did. So on pure candlestick analysis, it's pure analysis at this point, so no prediction. But pure on candlestick analysis, if this kind of pattern happens, it's a bullish case for a continuation to go up higher. It can continue grinding up higher like this, but we might also see some back in the area, coming back, or just grinding above. So you don't know, and this is where risk management comes into play, right? Because for us intraday traders, we don't have stop losses of, I don't know, like 1, 2, 3% of the assets. So we don't have stop losses of like 300 points, 600 points, where almost all of us are working with small stop losses, 20 points, 50 points, some maybe with 70 points, but that's it. And if you take a look at this, the close is at around 872. Let's say you have a 70-point stop loss, 800. It's here. So it's basically, it's nothing. It's going to eat you up if you don't zoom in on a minor time frame. We're going to take a look at this intraday time frame later. But in terms of risk management, guys, always have the big picture in mind, but then zoom in and wait for the confirmation, wait for the proper setup on a smaller time frame, because otherwise you will not be able to position your stop loss at a really good locations, and it will be hard for you to trade intraday. Okay, so we have NQ, a bullish, ES, basically sitting right at its all-time highs, right at this resistance area, but it's also bullish. I think we don't need to talk much about the bullish case here. It's obvious to everyone. Dow, also amazing, gapped, basically more or less gapped through the resistance, now rising above, also the new all-time highs. So I would be really cautious to fight those kind of things. Steve's favorite, Russell 2000.
Yeah.
Uh,
Hey, when it runs so cleanly, and a lot of times when it breaks apart from the other indices, then that's my favorite trade. So,
and yeah, so Russell the same. Actually, I mean, Russell, you will later probably talk about it in your metrics, correlations metrics. Russell is the weakest from what I've just like pure on taking a look at the chart. Russell looks the weakest out of the pack, right? So
out of the pack, but intraday, it's actually the strongest today. Which is
okay, interesting. Okay, interesting. Okay, interesting.
Intraday though, yeah, short term.
Okay, gold. Basically talked about it yesterday, right? So we had the liquidity grab here, now shooting up. So the area we need to take is 44.10. This is the area I would personally watch if I would trade, because if we can break above and establish ourselves above this resistance area, then you have a really good bullish case here, especially also for some intraday plays. Silver, similar. We were not able to make a huge liquidity grab down below, but it was also almost approaching its support area here. Break above. We have this resistance that we are sitting right upon. It's 71.50. This is if you want to trade silver. So 71.50. I would watch out for this area. Silver and gold, they're tricky, right? So you always should trade only one size. If you are trading on a proper accounts, you should only trade the micros with one size, and be really, really careful with stop loss. Only take the A and higher setups because they are so volatile, and you really need a proper risk management to make them work. Yeah, I mean, we have a super huge, almost long-term, not long-term, but our bull flag that we are now have broken to the downside. And yeah, nothing to say. We're broke below the. Actually, we talked about this level yesterday, right? That I'm watching for a short scenario, 78.50. So we are breaking below. We are currently underneath, and next target, in my opinion, is the gap. Our insider joke. It's all about the gap closes.
All about the gap close.
The
It's all
gap
about the gap close.
So my intermediate target would be actually this one here, 71.40, 71.50, to see our reaction there. But the big target that I'm personally would looking for if I would trade is 67. So this is the level to, in my personal opinion, to watch out for. In order to see some kind of a reaction, right? But on the intraday level, be careful with oil, super volatile, obviously, many players involved. What you want to see, if you want to position, actually, it's a pullback on a smaller time frame. And again, I cannot state it often enough, no financial advice, educational content only, do your own thinking. And yeah, Wix imploding. I think it continues its path. Yeah. Just definitely. So also here, next target is 1600, and then afterwards it's 13 red. I think those are the two areas to watch. And it's always super important. Many people are asking me, or also Steve, us, that yeah, guys, what do you watch Wix? What do you watch? All those kind of things. And for us personally, trading is all about adding stacking odds, right? So you have this strategy, you have this strategy. If you watch the big picture, that gives you some advantage. If you pull it together, bring together with some news events, this gives you an advantage. If you bring it together with different time frames, then multi-correlation, market analysis, all odds that are stacking up together, and this is how you can create the biggest, best multi-level strategy that brings all those odds in your favor, right? Because in comparison with many other businesses and trading, we don't need to work all the time. For us, actually, it's the best thing if you don't trade all the time. It's if we sit on our hands. And I think this is also the biggest misconception that most of the streamers, and most of the people on social media showcasing the people that they're trading in the market all day long, right? But this is actually not how successful traders and consistent traders, profitable traders are trading. They are waiting. Yeah. They're super patient. They're waiting for a good opportunity. They're waiting for basically all the stars to align in the right direction for them. And yeah, triple Qs.
Yeah, let us know, you guys. Any questions? Let us know how many times a day are you trading? Yeah. So once a day, maybe just a few times a week, or are you scalping? Because of course, if you're scalping, then your variance and your probability will be a little different, which is why you have to take on a few more trades per day. So everyone has a different style, and the day, if you're not profitable, that's all that matters. So let us know, you guys, because this is like a profit stream. So we are always going to lean back of strategies, ways to manage your account and move forward into the founded and the payout stage. So yeah, let us know if you have any questions.
Yeah, so triple Qs talked about yesterday, right? We had our gap again. It's all about the gaps. So we had the gap. We never came back to it. We actually closed well above. So next target would be this top of this trend line, in my personal opinion, that we are aiming for, to see either some kind of a reaction, or we go above and then reaction going higher. Yeah, sorry guys, the drawings are always a little bit hard with the mouse. So excuse excuse there, but yeah, you get the picture, right? It's also a bullish. It's also actually a bullish pattern here, and this one is, quite frankly, a really textbook big bullish pattern. So if we would need to take the pole here and copy it projection wise, it's a huge projection. If we
Yeah.
if we manage to break above, then we are looking at another, what is it, 810, 880, 950. So we're almost looking at another almost a 30% rise from where we are right now, right? And giving the markets craziness with everything that's going on, it's actually, I mean, can happen, right? We don't
It's
know.
very achievable, even though it
So
looks crazy, but
it looks crazy. Yeah. And yeah, but this is what I said in the beginning, right? It's not about your opinion. It's just about showing you the different variations, the different alternatives that exist, and you being aware about those kind of levels and trade around those, right? For the highest risk reward. So currently we're having the triple Qs. It's this resistance area here. Let's say it's 748. So this would be the area that we need to pass in order for us to go higher. And that's all. And that's all there is. You're basically getting a big view. You're taking, you stop out, you zoom out, and you just let the market showcase you what he wants to do. Because if you come with an opinion that is fixed, like, oh, the CPI needs to be much higher, the unemployment needs to be much higher, that the market went too far, too fast, evaluations are whatever, completely getting out of hands. I could say, like, yes, maybe, but I don't know, right? It's if we would know, then that would be a different game, but we don't know, and so therefore it's just important for us to know what can happen and just trade accordingly on a smaller time frame. All right, S&P basically the same as yesterday. We have this big gap. We have our resistance area. If we break above, it's bullish. Currently, we are within its range. So be aware, everything can happen at this point. And maybe one thing I missed to say yesterday, with all the news around Iran and the US, many times there's this buy the rumor, sell the news event, right? So now we have this whole SpaceX mania that is basically pushing the market higher. But in terms of Iran and US, those news, I would say, are now getting more and more in the background. If nothing fancy happens there, like no new escalations, then those news will be quietly go away or be more like on the passive side of things, and people will start watching more closely either the technicals or new IPOs surrounding those, like rumors surrounding IPOs, or the economy games, right? So it's always, the narrative always changes. That's the market is always chasing the new narrative to talk about, to create a new story around. And just, yeah, be aware of those kind of things. Our favorite Korean Composite Stock Price Index.
Oh, that's still there.
It's still there. But yeah, actually, I mean, this is amazing, right? It's
going for all-time high. Yeah.
The market, when I started many years ago, there was a saying: the market goes up and taking the stairs and goes down with the elevator. But since COVID, it's same speed, same velocity on both sides, right? Sometimes I even have the feeling that we are going up higher, that we're going higher faster than we go down because of the FOMO chasing and momentum chasing of everyone on social media. So yeah, just a quick side note on this one. All right, SpaceX 201, and yeah, I think, sorry, just a big picture overview for you guys. If you have any questions, let us know in the chat below. Otherwise, let's have a view on Steve's multi-market correlations metrics and to see how it goes.
Yeah, thanks, Henry. So yeah, seems like since the gap from over the weekend, narrative hasn't changed. We have we continuously pushing, but we're intraday traders, my friends, prop traders. So now that we have the zoomed out picture, let's zoom in and see what price action is doing. So far, we just have been consolidating in the pre-market session. Quiet news day, so no surprise. So consolidation continues until New York open or until we get a new catalyst for the day. I'm just looking at the news. I don't see anything right now. No major impulse, no clear direction for today. So I'm not surprised that we continue the consolidation. On low volatility, light data, yeah, ADP came in. As you can see, yeah, ADP came in and nothing really showed. Very soft, nothing shocking. G7 meetings in the background as well, but yeah, zero fireworks. So let's just look into quickly why this matters. Yeah, big money. I think big money is just staying patient. Nothing major going on right now. We've had the push, we've had the gap up. All-time highs are a few percentage points away. We can also map that out on the levels with the Nasdaq. So far, I have the market ranking right now. I mentioned to Henry where Russell 2000 is in first spot with Dow Jones. And you can see on the right as well, they're in the green. So intraday, they're much more stronger than Nasdaq and ES. So far, Nasdaq and ES, I would say, are about neutral of where they're sitting at, coming back into range, even though it's small red on the day, but nothing major. And it makes sense how, we have New York Open coming up in about 40 minutes, where price wants to settle. You could say at equilibrium, you could say at balance, you could say at 50% of the day. It's all really the same.
Could you show a side-by-side comparison or side-by-side view of between Russells and Dow, for example, just to see how much stronger the Russells is intraday?
Yeah. Like compared to Nasdaq or Russell and YM next to each other?
I don't care, but just like Russell against, for example, NQ.
Yeah, let's see. But, I was going to show you guys the ratios there quickly as well. So yeah, so this was just mark out the open, daily open. Yeah, right around here. Nasdaq is, we're right on the daily open right now. So you can say back to balance. And the daily open on Russell is right around here. So this is the strength.
But I mean, it makes in a way it makes sense, right? Because NQ made yesterday like 4% over slightly over 4%, and Russell's did yesterday like just under 1%. So there's like always this gap, right? And
always this gap, and we had a sell-off as well. If you look at Russell intraday, it was actually selling off. Like, it was interesting. I had it as my weakest pair, and yeah, it just kept selling off. Like in Nasdaq, yes, we're pushing higher, and there's no support in Russell. And then we also have a gap on Russell. We also have a gap, which I'll make note of later. And Russell was actually looking to close the gap much sooner. We didn't close the entire gap. There's still a portion here that needs to be filled right around, let's see how much, right around, about like half a percent, 100 points on Russell. So the gap hasn't been closed. It's halfway closed. So usually if one or two indices start closing, then eventually Nasdaq and ES will close as well. So that could be a forward-looking indicator as well. Thank you, Henry, for that. So yeah, if Russell's closing the gap, then we're most likely going to see Nasdaq and ES close the gap at some point. And yeah, we're seeing a small sell-off right now in Nasdaq, but we're just at the 50% range right now. Let's just quickly now go to the ratios. I was just going to show you guys my ranking. Give me a second. And yeah, usually I have a nice impulse level bias line for the day. But yeah, nothing came in today. Nothing came in, no catalyst, consolidating, no range. So what I will do is just mark up the levels, what I'm looking at for Nasdaq, whether I'm looking for longs or shorts above a certain level, but the bullish continuation continues. Nothing major. So what I'm doing right now is I'm just marking up New York Open from yesterday. If we're clearly above this level, this is my bias line. So as long as Nasdaq is above this level, I will be looking for longs only. But as you can see on the list, Nasdaq is not the strongest for today. I would need that climb to go in either first or second spot because I need to see a spread among assets. I need to see that market rotation out of Dow Jones and Russell and back into Nasdaq for me to look into any longs. But for now, this is my buy side. New York Open yesterday was 30,600. What I will do is I'll mark this up. Doesn't mean that today's range will be that wide, but just to get a context of intraday levels, I'm going to mark this up. So from the gap open from yesterday, 30,100, 190, will we close this gap? Most likely not. We're far away, but anything can happen.
Yeah.
Iran, there could be some, negotiation talks, new war front with Israel and Lebanon. We don't know what's going on in the Middle East. Maybe the World Cup is canceled. That could be a catalyst. What do you think, Henry? World Cup is canceled. Market sells off.
I think if the World Cup is canceled, then we're gonna say market limit down.
Market limit down.
Market limit down.
Market limit down. Yeah, we can't have that. Yeah, no, we need the World Cup. We need Canada. We need Germany. Maybe we'll meet each other in the next round.
If the championship is canceled, then it's going to be worse than the Strait of Hormuz.
Yeah, Strait of Hormuz. But I tell you, no, there's probably a better chance of the Strait of Hormuz being open, going back to business, than Canada winning the World Cup. But we might make it to the next round. We are looking okay right now. Our group stage is okay, but no, Germany has a much better shot, of course.
I think at this point you are underestimating the strength of Canada and overestimating the chances on the opening of the Strait of Hormuz.
Yeah, maybe I shouldn't be comparing the two. That's a little offside.
Unfair comparison. Unfair comparison.
Yeah, we're always neutral, my friends. Always neutral, looking for market reaction only. What do we have here? Market reaction bullish. What I did is I measured the gap to New York Open from yesterday, and what do we get? We get all-time highs. Not only, but look how perfectly this lines up, Henry. I'm just marking up the measured move, simple. I wouldn't say calculation, but simple drawing. Call me an artist, call me a chartist, whatever you want. Look where it lines up. Not all-time highs.
I call you the oracle.
But the New York Open from Wednesday. Look at this. This was the New York Open from Wednesday, 31,050. Let's call it. I would like the whole number, but let's just measure it right to the tip of New York Open from Wednesday, which is, sure, you can see all-time highs, but I'm not worried so much about all-time highs, more about the opening of New York, largest volume node of the session. And look how perfectly this meets up. This happens all the time. This is what markets do. They move level to level. I'm not saying the gaps will be this big each and every week, but for now they are. And these are the areas I'm looking out for right now on NASDAQ. And if we can meet this area, I'm definitely not looking for any longs or any shorts up in this area. So this is why I marked this out, because we could get a lot of zigzag uncertainty. So if I'm looking for any trades, it will be right around this area for longs. And for any shorts, we would have to break down, even though I'm not getting the best price, but we would have to break down from this pivot, possibly retest and continue lower. So the probability of shorts is definitely much lower since there's a lot of travel space there. But anything can happen, you guys. It's Tuesday. It's known we're to get a lot of surprise catalysts, especially when on the economic front we had really nothing going on. So I wouldn't be surprised if we have something coming in. Always watch. Oh, and look at this. We had something that came in a few minutes ago. Something about Hezbollah. Promises that Iran will not sign a nuclear deal with the U.S. unless Israel withdraws from Lebanon. Okay, so that's the newest red. I wouldn't say, sorry, not red calendar, but red impulse that just came in. Not much movement on the candles on volatility. When did this come in? This came in about 5 minutes ago. Yeah, not much going on. So I wouldn't worry about it. If, of course, we had a big pull in either direction, I would mark up the level. But market's not reacting. It's not so much about, okay, it looks like a scary newsprint, a scary headline, but the market's not caring about it. We are not caring about it. So let's move on.
And I mean, Hezbollah said it for the whole time, right? So it's a well-known fact that they tied this whole ceasefire thing to the peace in Lebanon. So it's not like it's not a piece of new information, basically.
Yeah, exactly. We move on from it, and seems like Nasdaq is actually, what I do here is, okay, I have the ratios here. I compare now Nasdaq to ES, Nasdaq to Dow, Nasdaq to RTY. This helps me cut through the noise. This helps me look at the mood of Nasdaq overall and just see rotation. Where's the rotation coming in, and where's the rotation going out? So far, what I can see, it's going out of Nasdaq and into Russell and Dow Jones. Dow Jones is known for being, an older indice. Sure, a lot of times it can take a lot longer for volume to get pushed into it, but that also can give you a signal of what's happening in the real economy as well if more money is getting pushed in Dow Jones. And so far, what I see is, Russell is still the strongest. Ratios down below the opening range on both Dow and Russell, and we're right about break even, but I would say no, Nasdaq is pulling away from ES. So let me just quickly edit the ranking, and let me just put Nasdaq on last place. So if I'm looking for any short ideas in the bearish trend for now, intraday continues on Nasdaq, then I'll be looking for shorts on Nasdaq. So let me just quickly adjust that ranking. Any questions, you guys let us know. I don't know too many people that use, I know we know hundreds, thousands of traders that are using, divergence, correlation, but do traders actually use the ratio plays, especially when you can use, a lot of times you can use these ratio plays even zoomed in. What I do is, for now, I have the zoomed out picture, and then there's an important catalyst or level, then I zoom in on the ratio and see, okay, who is outperforming who? And this can a lot of times give you a nice direction on trend and which asset to put money on. Because if you're always putting bids on Nasdaq, then you might get in trouble a lot of days or even weeks, because sometimes Nasdaq ranges. Nasdaq doesn't always like to rotate in and out and trend, because we're looking for the trending product. We want those sharp moves. We're intraday, and sometimes you think, okay, I saw that same setup last week or last month. Why is it not moving right now? We'll look at the other assets, look at the VIX, look at possibly even gold and silver, but just to keep it simple, just look at the other indices, and when you see even ES or Dow Jones flying and the Nasdaq consolidating, then that's when you're able to paint the picture. So for now, Nasdaq is the weakest. RTY, Russell 2000, as Henry always says, my good friend, is the strongest. So let's look into Russell. Let's map out the gap. So we're well below the gap right now. So what I like to do is I like to map out the same levels that I did for Nasdaq, now printed on the Russell 2000. Where was the gap? Right around 3,000. That was acting as support, now acting as resistance. So interesting, on the 2-day basis, it's painting a different picture, but intraday, we're a little stronger. Not much stronger, but we've been floating higher, but it would make sense because we're starting to close the gap there. And where was New York open? New York open was right around a similar level, right around there. 3,010. So I think what's most important right now is to mark out the gap close and the gap open. And those are 2 levels for now on Russell 2000. Let's mark this up. If it wants to push higher, but the thing is, if you zoom out on the Russell 2000, wants to push higher, where are we? We're in no man's land. No man's land. But this is why we put on the measured move, because we don't have any previous price action to go off of. So I'm just going to mark this out and then show you guys why the gap opening is so important and how it's relevant to previous price action and where it's topping out on. So let's just put this on 30,000 or 3,038. 50%, right around there. And this is what I'm looking at on Russell 2000. We already closed half the gap, so doesn't mean it has to happen today. We can easily, we got some bullish news, we can move up. But for now, if I'm looking for any long ideas, we would have to close above and retake this 3,000 area. Retake this area, and if we can continue on Russell 2000 on its strength, and if it's still on first place on my market ranking, we're most likely going to take out this high, which is the all-time high, and then go towards the next new level of supply. But if the bearish price action continues, you know what, it's tough to say, but you could say bearish is bullish for the day. But you know, if we switch up on the ranking and Russell 2000 actually starts to sell off while the others are rotating back into bullish territory, then I wouldn't be surprised if we close the gap. But I would be very careful on this area as well. If we tap into, I wouldn't be taking any new trades on this area. 2970, mark this out if anyone's looking onto Russell 2000. Why is that? If you zoom out, look where it's tapping into. Look at this heading. All-time high, tap. Second tap, third tap, fourth tap, and then finally we pushed above. So if we come down and retest this area, which I'm not surprised, which is where the gap was, we would get a lot of volatility. Either a V shape. Thing is, there's three scenarios that could increase volatility. A V shape, because it's obviously been held as strong resistance for many days, or actually more than a week, into support, where we could get either three scenarios here. Strong V shape, right back up to a new level, no surprise there. High volatility of consolidation, which would kick people out either in the long side or the short side, or of course there's always a possibility of, you know, we hold it for a bit and then we just sell back down because it's a good area of supply for large orders to get filled, because that's what the market's looking for. It's looking for large areas and large institutions to fill their orders. They don't care what happens in the middle. Institutions are not placing their orders here. They're placing their orders at important levels to release their liquidity. That's what's important.
I mean, they have to. If you are sitting on a 5,000 full contract lot position, you cannot trade it randomly. So you need those external, like those extremes on both sides for your position to be filled around all the liquidity.
Yeah.
And some
people say exactly, like that's why a lot of people say, like, oh, the daily highs and lows, the weekly highs and lows, liquidity grabs. No, it's not so much that. It's like Henry said, they need the extreme levels. And a lot of times, okay, it could be those daily levels or weekly levels, but if you really zoom out and it matches up with like major like impulse levels, major like news catalysts, when there was a lot of volume in the past, or New York Open where there's a lot of volume in the past, a lot of times they do line up with daily highs and lows, but people just might be distracted by that all the time because it doesn't have the same validity at all times.
I think the biggest misconception is that many people think if they hear liquidity grab that they're thinking automatically about stop loss hunting, right? But it has nothing to do with stop loss hunting. It's basically big positions need big order blocks, need big size in order to be executed without much loss due to slippage. And this is what it's all about. If you have thin liquidity, you cannot execute a huge order without losing out too much of your position due to slippage, and that's all about.
But the brokers love slippage. The brokers want you trading aftermarket, Asia market, London market, no liquidity, because they eat up your commissions, they eat up your fees, and that's their bread and butter. But we don't have to we can get into that later.
maybe just one side note. I think the biggest slippage that I ever had has been like over 100 points, and I've been super happy to pay those over 100 points in slippage, because otherwise my account would have gone completely. It was like a limit down move or whatsoever, and without stop loss 25 points, 30 points, next traded price, like instant news, right? Those 3-second news that open with a white box, nothing happens, and if you don't have a take stop loss in place, you're getting killed, you're getting smashed.
Yeah, my biggest slippage, I don't know if you're gonna like this story, Henry, or I'm sure a lot of people can relate, was when I was in my penny stock era. When it was trading, I think it was trading at, I think it was like 10 or 11 cents. Of course, no liquidity, no volume. And then I just pressed market order because I looked at this the bid and ask, and there was no bid on it. So I just hit market order, let's say a few $1,000, and I got it at, I think, around 18 cents. So almost double the price. So almost double the price I got at because there was no bid at 10 cents or lower. So yeah,
Yeah,
that
but I
was my
mean,
worst.
those are the mistakes we all need to go through in order to learn from them, right?
Yeah.
It's the only way moving forward.
Yes, big lesson. I've never told you that story before, but I'll tell you guys. I say it live. I'm sure everyone's been there, but that was my biggest spread. It was the penny stock
It's funny.
era. But yeah, for now, you guys, we're consolidating. Nothing going on. Do not rush into any ideas. There's no point. There's no validity unless you're looking at Dow Jones or Russell because they're a lot stronger pair for now. But for me, my bias line is 30,632. It's always the midline of anything that's going on. But since we have nothing going on, no major impulse, then it would have to line up with the New York Open of yesterday. Because why is that? Because if we're naturally, if price is above this area, then we're in bullish momentum. If price cracks it, retest it slightly, maybe ES retested, maybe Nasdaq, possibly Dow Jones. One of them always retest these important levels. I'm not saying Nasdaq always has to. That's why I look at the other indices for options, and then I make my play. Whether it comes a half an hour after open, whether it comes 2 hours, 3 hours, I just set one risk limit and let my trade play out. So any questions, you guys let us know. If you're trading with Purdia, with other prop firms, feel free.
Yeah, I just want to take the chance, as we just talked about slippage and liquidity. I want quickly to showcase what it actually means in terms of overall risk for your account, right? And in risk for the, wait 1 second. It's not working. Okay, no, it works. Okay, so let's say that it's NQ, right? Nasdaq. So we're currently sitting, wait, let me zoom out for you guys so you can see what's happening. So our chart. So it happened, gap, bullish continuation pattern. Then we broke above new all-time highs, now consolidating right on their new all-time highs. So this is basically, let me make this another color. This is basically our new support area. It's a minor, like a micro support area for intraday, right? So we don't want the market to break too much down below, because otherwise we're getting back and this area. And so, but if we break below, it's a short scenario, no financial advice, do your own thing, just like an analyst's talk. If we stay above, continuation to the top side, right? To the bullish upside. So if we break below, it might be a kind of a micro double top formation. Just saying. So always be aware of those kind of things. If it's double top, it breaks below, measured move. This would be its temporary target. So this much for the short-term scenario. Again, no financial advice, do your own strategy, just showcasing you possibilities that could happen. And if we go above and explode further up, then nobody knows how far it can go. In terms of risk, all right, let's say, so it's quite volatile, right? So the last 4 to 5 minutes, it's actually 1 hour chart. Let's go zoom into the 5-minute chart. So let's say we're looking at this area here, 865, 828. So we're talking here about 40 points, right? 40 points. I have this, and I really highly recommend everyone to do for himself a small Excel sheet. So let's say we said it's like a 40 points distance. If you short it here and you want your stop to be a little bit above, let's make it 40, 50 points, right? I would say, given the current volatility we're having, 40, 50 points is what you need. So now, as always, we make an example. Let's say you take an either instant funding account or evaluation account, let's say 50K, comes with a $1,500 drawdown. You're risking $100 per day, and more on the conservative side of things. So we're not gambling here. We're not going all in, risking all the risk on one day. So we're really trying also to establish professional habits, because if you're trading full-time professionally, even if you trade part-time, not even full-time, but if you want to become consistent profitable trader, you need to have proper risk in place. And even $100 a day is already looks small, but it's actually, what is it? 6.6%, right? It's already 6.6% of daily risk. So it's already way too much of what I would recommend anyone to trade with. But because it's such a small account, it's cheaper, you get the leverage. It's I would say it's all right. But you should not really go much beyond. If you really want to push it, you could risk $150 per day, so you have 10 days in total. But then you're looking at a daily loss risk of 10% per day, and this is really the maximum I would recommend to trade with. And so if you have $100 risk, so this is like the first step you're doing, right? How much risk do you have? How much do you want to risk per day? Then the question remains, how many trades per day do you want to trade? But first of all, let's say risk available, 100 NQ full contract. That means $20 per point. Distance, 40 points, equals you need $800 for your idea to trade with. Not possible. Size 0. Micro NQ, per point, $2. Distance, 40. $80 risk in total means you can trade one full micro NQ per account. And this is where it gets tricky, right? Because everyone is just buying 3 accounts, or with other companies 5 accounts, and then basically just copy trades them using the same idea.
Yeah.
But the actual idea why all the companies, especially with us with Purdia, why we just give you free, because we knew it's going to happen and we didn't want it to happen. We thought like, hey, trade properly, don't just copy trade. Because so the idea is, if you have 3 accounts, that you don't copy the same idea, because now if you have one losing trade, your daily risk is gone. So use account 1 is 1 trade. Account 2 is 2nd trade. Account 3 is 3rd trade. This is how you should do it. This is, in theory and also practically, how everyone should trade with multiple accounts, not just copy trading them and then having the same exposure, both to the upside and to the downside, but basically trying to establish more of a risk management parameters, right? And trade it like you would trade your personal private account that has a much bigger value. But because social media and the whole space is full of people showcasing their P&L all the time and not focusing so much on execution and strategy and proper habits, in my opinion, everyone does it wrong. But yeah, it is. All right, so this is for NQ. Now you have seen, all right, 1 micro account max per account. Use every account, like think about every account as an extra trade for yourself that gives you during the day. What do we have? ES. Let's say we take the middle of this to, oops, I'm sorry, wrong one. Let's say we consider this area, 2850, 24. So I would say it's like 4 full points, right? 4 to 5 points. And guys, we're talking here about the 5-minute chart. So it's a really, really, really short time frame.
Super dating, I was gonna say, but for a lot of people, they only trade the 1 to 5 minute. But yeah, it's very,
and especially once the US opens in a couple of minutes, then obviously volatility will explode, right? Then you're looking at 5 to 10 points. So because now before they open, it's more quiet, but once it open, we're looking more to 5 to many more points in terms of stops you need. So let's say, but nevertheless, let's say it's 5 points, full contract, no chance, 0. Now the same with the micros, $5 per point, 5 points, you can trade 4 micros. So, but I would not recommend this, because then you're still blowing through your whole daily risk on one trading idea. So I would either make the stop loss wider, so you give yourself more, the trade idea, more room to breathe, or I would cut the overall size exposure in half, and hereby giving yourself 2 trades instead of 1 trade per account. So in my personal opinion, when I used to trade full-time and being a full-time trader, not being more on the business side of things, I always tried to give myself enough room for 7, 8 trades. That was like because I knew if I have more than 5 losing trades per day, it's usually not a good trade for me, at least per asset, right? So it's not only for in total, but per asset. So let's say I traded 3 markets, so I knew, all right, I want to have 15 total trades, and this is how I structured my risk across those accounts. But if you just trade one market, let's say NQ, then bring it down, right? So I would recommend trade 2 micros. So this gives you 2 trades per account.
Not 2 minis, right, Henry?
Micros.
Yeah, micros. I'm still very surprised, even with the 150K or the 100K accounts, why so many trade minis. It's crazy.
You would really be surprised, because the biggest issue I have seen and heard, and spoken obviously with hundreds and thousands of traders, but many people are coming from their own account that is like, I don't know, $50,000, $100,000 to $100,000 account, like in cash, right?
Yeah.
And so they used to have a risk, like also not proper risk management in place. So they're risking like 5,000, 10,000 per day. So they used to trade the full size contracts, and now they're coming to the prop game, and they're still thinking that they are trading their own account, but it's not the case. And therefore, almost everyone, I would say over 95%, and the prop trading space are completely over leveraged, right? So, and guys, that's basically the idea, right? Then you take a look on Dow. Let's say this is your area, 265, 247. Let's make it a bit bigger. Let's give it a bit more room, 30. Let's say it's 30 points. It's the same, right? It's the same idea. So I can really highly recommend everyone to do himself a little tool. And then you see, because this tool really helps you get a systematic risk management, like helps you with your risk management, and gets you out of problems, to stay out of problems. And yeah, I think this is, in my personal opinion, how people should trade, how I recommend everyone to trade. But obviously, people never listen to the people who have been trading
Sometimes
professionally.
they listen. Sometimes they listen. When they finally realize, Henry, that not so much over leveraged, but overexposed. Once they realize they're overexposed, they're coming out of the ocean completely naked, embarrassed, then okay, it's time to change. It's time to shift your mindset, shift your survival rating in the markets. That's what it is. It's survival. We accept that what we get, we cannot pinpoint the top or the bottom at any time. Don't expect that.
Yeah, but the problem is, I mean, in trading, Steve, obviously you're a coach, but also a full-time trader. You know it yourself. It's all about consistency, right? It's all about consistency and having daily good habits, proper performance, and also a system in place. And I think the people saw in your description of your correlation system strategy how a proper breakdown of such a system works. Yeah. And from what I'm seeing, people are jumping all over the place. They're trading a universal system, they're tracking breakouts, they're tracking ICT, They're trading price action, they're trading order flow, footprint, volume profile. So they're all over the place. And if you're a multi-millionaire trader and you've proven yourself over years and years of consistency, then you can add all those kind of things. But if you are inconsistent and even unprofitable trader, then you should not mix up more than one style, and especially not being all over the place and watch 10 different creators from each strategy, and because then you will be confused. And I always used to say in algo trading, random in, random out. So you really need to have a consistent path and consistent structure in your trading in order to make this whole thing work. And so yeah, this is why we decided to do Purdia the before the bell show, the pre-market show, right? It's not about so much about chit-chatting with you. So we are always love to help you if you have questions, if you don't understand anything, if you want to have more details, then we're always here, always happy to help. And yeah, let us know down in the comments down below what you like, how you approach those kind of things. If you need more details, then we can talk about those in more detail on the next show. And for time being, we better say, always say, guys, be prepared and stay. This helps you to stay out of unnecessary errors. And as we all know, one error can help you from accidentally committing yourself to many more errors. And so it's all about mindset, right? It's all about mindset, having good habits in place that help you along the way to keep yourself out of problems. And yeah, Steve, do you want to add anything?
No, you hit it perfectly. Where your personal habits, always go into your trading, and try and make your setup, your entry point, and your stop loss always the same. Make it strict. You could even say make it boring, where it's always the same. And if you want to add any layers, add the layers afterwards once your position's already live. Where for example, I just want to quickly add, like, let's just say, like a quick example here, looking on ES, whether it's ICT, whether it's the daily range. We see here we have a gap, and if you're looking for bullish momentum, you can be like, you know what, I want to add this structure because there's a lot of times there can be a trigger point at these gaps. Maybe I'll take one TP at this gap, and my next TP at the daily all-time high, and then my final TP, let's say, at a pivot, instead of like wanting to trail all the way to the pivot. So if you guys are looking for different strategies, look for the strategies when you're in profit, when your trade is in motion. But after you've, like Henry said, you created those consistent results, your invalidation level, your stop loss, your entry point, keep it the same, keep it strict to one sort of setup or strategy. And then afterwards, add the layers once your trade is actually in place. So that's just one little advice I can give. Of course, as always, it's no financial advice, you guys. We set you guys on what's going on intraday, what's going on pre-market. As you can see, it's a very slow pre-market, but anything can change. So measure up your risk. Use the table that Henry gave for you guys. Stick with micros. don't be copy trading with minis like what you see online.
And especially don't copy trade any people on social media, because it will not help you. You don't have the strategy, you didn't backtest it, you did not apply it to your own risk parameters, to your overall financial situation, right? Because if someone is able to buy himself 100 accounts per month, then he might trade completely different, because then he might really like risking half the account size per trade, because he doesn't care, because he has his strategies basically on risking half the account per day, and then just buying accounts, like having the possibility to buy 25 accounts each week, right? So those things are not commented upon, are not people don't talk about those things. Therefore, it doesn't help you just to trade along and copy trades from other people, because in the long run, it will not help you grow. It's entertainment, but it's not actual proper working habits that you establish this way.
Yeah.
All right, everyone. If you have any comments, if you want to hear more about any particular topic, let us know in the comments down below. If you see the description, there are all the links to our socials. Follow Purdia Capital, follow Steve, follow myself, even though I'm not so active, at least for the moment. But subscribe to this channel, to Purdia Capital on YouTube, so you get notified once we go online. Usually we try to make it every day at 8:15 Eastern time before the bell, but sometimes it will not happen. So therefore subscribe to stay updated. And yeah, thanks a lot, and talk to you soon. Talk to you tomorrow, Steve, and everyone. See you tomorrow. Take care. Bye-bye.